What if the one thing you've always believed about gold is no longer true? For decades, it's been the fallback, it's a safety net. The narrative is breaking apart. The thing you buy when the system starts to crack. But now, something's shifted. And most people haven't noticed. They're buying ... quietly and aggressively. Vault doors are closing. Reserves are being filled. And no one's telling you why. Safe haven. Or just another myth investors tell themselves to sleep at night. Gold bars used to mean security. A cut to today. Market crashes. Bitcoin surges. Headlines about central banks scrambling to buy gold behind closed doors. And why even central banks are acting like something big is coming. They told you gold was a safe haven. That when everything else collapses, gold stands firm. What if gold is doing exactly what it's supposed to? Do, just not in the way the modern financial system expects. Stocks crashed. Proof that gold couldn't hold up when it mattered most. But look closer, and you'll see something very different. When margin calls hit and portfolios are bleeding, investors don't just sell what's losing, they sell what can be sold. In gold, it's one of the most liquid assets on earth. You can offload it anywhere, anytime, for cash. Oil collapsed. And that's the part no one's talking about. Today's financial world expects everything to fit into a quarterly report. Up when stocks go down, down when inflation drops. A perfect inverse line on a chart. But gold was never built for that. It's not a short-term hedge. It's a long-term defense system. These central banks aren't buying for returns. They're not buying to beat the market. They're buying to survive what's coming next. In gold. It dropped too. Not just inflation, but full-blown monetary failure. Currency debasement, policy collapse, systemic unraveling. Yes. Nassim Taleb spoke of fragility, of how modern systems become weaker when they rely too heavily on artificial stability. But to really understand gold's role today, you need to see the 5 reasons it still holds power in a world that's rapidly losing control. For a brief moment, the so-called safe haven was falling just like everything else. What if the reason gold gets sold in a panic is because it's the one thing that always has buyers? And if that's true, then maybe gold isn't failing. Maybe it's quietly proving why it still matters. From ancient empires storing it in temples to the Bretton Woods system backing entire currencies with it, gold was never just a metal, it was trust in physical form. After 2008, when the global financial system nearly collapsed, gold surged again. People called it the ultimate hedge, the last true safe haven. But what if that's not the full story? What if the truth is more complicated and a lot more urgent? This is gold doing exactly what it's always done, being useful, being trusted. It was a shift. These weren't speculative bets. They were strategic moves, moves away from the US dollar. Moves driven by something deeper: fear of sanctions, currency weaponization, and a financial system that's starting to crack at the seams, being there when you need it. When chaos hits, investors sell what works, and gold works. But that still leaves one massive question hanging in the air. If gold is getting sold and crashes, why are the most powerful institutions in the world quietly buying more than ever? Because while everyday investors question if gold is still worth it, the insiders, the ones with real power, aren't talking. While retail investors debated crypto and tech stocks, central banks across the globe, China, India, Turkey, and dozens more were quietly doing one thing: buying gold. A lot of it. Make sure to subscribe and hit the notification bell for more gold videos, and make sure to stay to the end because we exposing what Wall Street 1T gold has always carried a certain mythology. Nations don't want to risk having their reserves frozen, seized, or digitally erased. That's why they're reaching for something no government can manipulate: gold. But here's where things get complicated. The modern definition of a safe haven is narrow, too narrow. They point to moments like March 2020 when everything dropped, including gold, and say, see, gets broken. In financial textbooks and Wall Street reports, a safe haven is described as something that moves opposite to risky assets, especially during a crash. If stocks fall, your safe haven should rise. That's the idea. So when gold doesn't behave that way when it falls alongside stocks, even temporarily, critics call it unreliable. But what if they're missing the point entirely? In March 2020, as the world locked down and markets spiraled, something strange happened. To the untrained eye, that looked like failure. In times of crisis, liquidity becomes everything. This isn't gold failing. It's from 2022 to 2024, something massive happened beneath the headlines. This wasn't a trend. When the dollar becomes a tool of enforcement, instead of just a reserve currency, trust erodes. Gold doesn't come with a counterparty. It doesn't rely on digital rails or political alliances. It's pure, neutral, and untouchable. Maybe the real problem isn't gold. Maybe it's how we define a safe haven. Gold's real purpose is simple: preserve purchasing power and protect against the collapse of monetary trust. Friedrich Hayek once warned of the fatal conceit, the belief that central planners could control economies like machines. Gold doesn't play that game. It doesn't bet on the system. It protects you from it. That's why it still matters. If you don't understand these 5 truths about gold, you're going to get blindsided. Because gold isn't just another asset, it's a completely different category. One that operates outside the rules of modern finance. One that still works when everything else breaks. Unlike bonds that rely on governments to pay, or crypto that needs a functioning internet and exchange, gold simply is. You hold it. You own it. Can't be frozen, defaulted on, or erased with a keystroke. First, gold has no counterparty risk. It's tangible, independent, no signatures, no contracts, no digital infrastructure required. As the dollar loses purchasing power and the world edges toward de-dollarization, gold doesn't flinch. It doesn't spike every time inflation rises, but over decades, it tells the truth. It protects what you've earned across generations. Second, it's a long-term inflation shield. Through the 1970s, the 2000s, and now, gold has tracked the slow decay of fiat currency. Gold doesn't need to behave like stocks or bonds. Its value isn't tied to quarterly performance. When systems crack, gold doesn't ask for permission. It simply holds. Third, gold offers liquidity under stress. And that is exactly why it still matters. Because gold doesn't need electricity. Doesn't depend on code validators or blockchain consensus. It isn't stored on a server or backed by a white paper. It simply exists immune to hacks, updates, or outages. When markets freeze, when banks close, when credit disappears, gold moves. But when the grid goes down, when systems glitch, when the digital world breaks under its own complexity, gold is still there, still valuable, still untouched. Fast, quietly, globally. It's one of the few assets you can sell instantly, in any country, without a third party. When systems fail, simplicity survives. Currencies weaken. Systems that once felt unshakable now seem paper-thin. So ask yourself one question. Are you holding what actually lasts? That makes it priceless in the middle of a crisis. Fourth, gold provides true diversification. It has short-term volatility. It doesn't always spike during a crisis. It just sits quietly in the vault, waiting for the moment it's the only thing that still works.
Ow.
It doesn't try to outpace stocks or time collapses. It simply waits. Because when the system breaks, it's too late to start preparing. Quietly, patiently, unchanging. It just sits there, doing what it's done for 5,000 years. Because over decades and, especially when systems truly unraveled, doesn't break, it doesn't default, it doesn't vanish. Sometimes it moves in ways that make no sense on a chart. Not the fake kind where everything moves together and your diversified portfolio still crashes. And fifth, gold is a geopolitical and systemic hedge. Wars, sanctions, currency, collapses gold. Doesn't care who's in charge or what rules they pass. It operates outside the system. That's why central banks stockpile it. And that's why citizens do too. It's not about getting rich. It's about not getting wiped out. AI promises to predict markets, rebalance portfolios, and replace entire layers of human decision-making. So where does that leave gold? In a world obsessed with speed, data, and innovation, it's easy to look at gold and wonder, has it been left behind? Crypto enthusiasts call Bitcoin digital gold. It's faster, borderless, programmable, it's slow, it's heavy, it doesn't yield, doesn't scale. Bitcoin might be the future. AI might reshape finance. Gold is relevant because it's simple, because it doesn't evolve, because it doesn't need to. So, is gold still a safe haven? If you're looking for something that rises every time the market dips, gold will disappoint you. But that's not what it's for. Gold isn't a prediction tool. It endures. Gold doesn't predict the storm. Gold's not for gamblers. It's for survivors. If you're watching this in 2025, you already know the world feels fragile. Markets swing wildly, because when everything else gets tested, your portfolio, your bank, your currency gold doesn't flinch. It download our free gold IRA guide using the link below.